Hey, what's up guys? John here. Apartment building sales dropped 74%, the most in 14 years. What I think is very likely going to happen is we're going to continue to see apartment building sales plummet, but we're also going to see some very unique things happen with mom and pop landlords and investors all throughout America. And in this video, I'm going to break it down for you. Also, today's video is sponsored by GreatCreditFast.com. If you want to fix your credit to position yourself for the greatest wealth transfer of all time, go to GreatCreditFast.com and schedule a free consultation. Take a look at this. So, LA County multifamily markets enter a steep decline. Number of units sold falls 38% since a year ago, while sales price per unit drops 18.4%. The number of units sold in LA County fell nearly 11% from the first quarter, right? However, look at this. What percentage of property owners refinanced during the pandemic? 14 million mortgage borrowers refinanced their homes. This is just between 2020 and 2021. Now, what many people don't realize is that most of the housing stock is owned by mom and pops. And so what did they do during that situation? Well, many of them looked at inflation and they looked at the cost to borrow money and they realized, hey, I can borrow money for 2.5% or 3% when inflation is 7, 8, 9, some would say 10% or more. Why not borrow the free money? And so many people did. And they did so based on the income that was being generated from their building when rent was sky high, when rents were just hitting all-time highs. But now look at what's happening to rents. Look in Dallas, for example. Dallas skyrocketed. Now it's really starting to come down. You look at Los Angeles. Los Angeles rents now are touching 2020 levels. And this is only just the beginning. Wait until we start to see real financial distress across all single families in this economy and more and more and more inventory. People start listing their homes for rent. We're going to see rents likely continue to fall. San Francisco is starting to come down as well, of course, for obvious reasons. We're starting to see a lot of buildings in general go into default, into foreclosure, a lot of storefronts going out of business, theft, crime. I mean, San Francisco is not what it once was, only just a few years ago. San Francisco is going through a very, very dark time. You look at Phoenix. Phoenix is getting absolutely smacked right now. And a lot of people are investing in real estate, especially real estate syndicators. People are running out there just piling cash into deals in 2020, 2021, 2022 when rents were at all-time highs. Now what's happening? Borrowing costs have went from 3% to 7%, and now these rents are plummeting. And so what's happening? We're seeing values just plummet. Multifamily owner squeezes, values drop 20%. Now here's how this whole thing kind of plays out. I'll lay out the complete framework of how I see this playing out. So if values drop 20% and the average multifamily syndicator or real estate investor was putting 30% down on a building and values dropped 10%, that means they only have 10% equity potentially in that building if they're factoring in for the cash that they put in. So they'd have a 10% margin. And this was back in April. So more than likely they're underwater now. So if they were to refinance, they'd have to strike a very, very big check, which they're not going to. And private equity knows that they're not going to. And that's why they're sitting on $3.7 trillion in dry powder. 3.7 trillion. This is just reported. This is just American companies. Wait until overseas companies start to come in. And this is dry powder alone. So when you factor in the fact that they're not going to just pay all cash, in fact, they'll probably put 30% down or 25% down on most of these properties, they'll be able to get access to $8 or $10 trillion more. So when we look at this commercial real estate situation that's unfolding all across the country, and we look at all these private investors and private equity funds sitting on the sidelines, waiting for Jerome Powell to keep rates higher and higher and higher, and one hike after the next, they know that these people, these investors that bought these buildings in 2020, 2021, 2022 will not be able to hold on. They're going to move in, bang, and pick up a ton of inventory. And when I say a ton of inventory, I mean CNBC and a lot of publications said that by 2030, that most of the housing stock, 40%, which is in my opinion most of the housing stock, will be owned by private equity. And so this is what we're witnessing. We're witnessing this massive rug pull that was set up across multifamily and commercial real estate. And I actually talked about this on this channel, and I told everyone I sold a property right here. It was in August of 2021. So it was like right here, almost at the top. But now looking at it, I was actually looking at the deal recently. Like I don't see how they're even cash flowing. They're never going to be able to refinance, at least not anytime soon. If they were to go there and put 30% down on this building today, it would run in the negatives. So you'd park $450,000 down to lose money every single month, right? People aren't going to do that. They're not going to do it, and that's what is going to happen. We're going to see a mass repricing across real estate. And I think it's, this is actually, for new investors, this is actually a good thing. For people that, were investing a couple of years ago, it might be a bad thing for those that want to sell soon. But for people that are renting right now, you take a hard look at what's happening. If you're renting and you eventually want to invest in real estate, you might be able to pick up a duplex or a triplex or a fourplex for, a really favorable price in the next year or 2 years. But this is the time to kind of pay attention to your market, because I think we're going to start to see a lot of distress. And if you understand what to buy, you understand what value looks like, you have the right plan and the right strategy, you really have everything buttoned up, you might be able to go out there and take yourself from a situation to where you're spending a ton of money right now on rent to being able to own a property and being able to do it for an affordable rate. This is what I think is going to happen. I believe that we're going to start to see a lot of people that are currently renting apartments that are going to be able to potentially go out there and invest if they have the cash. The real problem is going to be having the liquidity. We have $1 trillion in outstanding credit card debt, which is a major problem. We have $1.7 trillion in student loans that right now are still on pause. So when they come back on, potentially in September or October, unless they push it out further, we're going to see inflation, the cost of service debt, and student loans, auto loans, all of these problems start to unfold on the average consumer. And so these consumers, they're going to have a harder time being able to buy their first deal. But if you are a consumer right now and you want to invest, paying attention to how you're spending your money, paying attention to the interest rates you're paying on your credit cards, and where you want to actually go, and paying attention to these trends, you're going to be able to position yourself, I believe, to be able to buy your first deal. But this is the major issue. A lot of people refinance their buildings the last couple of years based on the notion that rents were going to continue to climb or at least stay high. And now we're seeing these rents starting to plummet with insurance and taxes and utilities continuing to rise. It's going to be, without doubt, an absolute bloodbath in real estate. But, like the old saying is true, is that you want to buy when there's blood in the streets. And I believe, without doubt, there's going to be a lot of blood in the streets. Almost $3 trillion in commercial loans need to be refied over the next few years. So you start to do the math here. A few trillion has to be refied, and they're sitting on 3.7 trillion, right? This is what's going to happen. It's going to be a massive run on American real estate, to the likes of which we've never seen before. And it was so obvious. It was so obvious. When I was talking about this before on this channel, and even on Instagram, I would get messages. People would be like, oh, you're a fear monger. You're trying to scare people. It's like, just look at things. Look at things clearly. They printed 40% of all the money since 1776 inside of 2 years. All bills were optional. Stimulus, PPP loans, all of this was fake. It wasn't real. None of it was real. But many people wanted to pretend like it was real and it was sustainable. Now everything is getting pulled back, and we're going to see a lot of people that are going to learn some hard lessons. But we're seeing a lot of people right now that see things clearly, and they're sitting on cash. They're preparing. They're positioning themselves for this situation because they know that they're going to be able to make an absolute fortune if they are patient and they have, everything that I just mentioned, the right strategy, the right game plan. I mean, look at all these people that are raising money the last couple of years on social media. They're raising a ton of money to invest in real estate, buying deals that barely cash flowed at record high rents and record low interest rates. And many people thought that, hey, these people, they're, extremely smart and savvy. No, a lot of people honestly just got caught up in a decade plus bull run. A lot of them had no experience, no real knowledge, and they just went out there and they were just, lucky with timing. Everything just continued to go up. So anything that they would buy would go up, including stocks and crypto. But now we're entering a period where it's going to actually take a real sound intelligence. It's going to take knowledge, like real knowledge and real skill to be able to go out there and to really navigate and move through this market and make a lot of money. There will be opportunities, I'm telling you. There's going to be a lot of opportunities to make an absolute fortune. But watch what happens to residential real estate. Watch what happens to multifamily and commercial. It's going to get completely rewritten. Everything is going to get repriced. It's going to be huge. Drop your comments below. What do you think about this? Private equity is sitting on $3.7 trillion in dry powder. Why would they do that? Why would they do it? Well, because they know that these problems are coming. Drop your comments below. Let's talk about this. Add me on IG for content you're not going to get here. At This is John Williams. If you need help fixing your credit, you want to position yourself for the greatest wealth transfer of all time, we would love to give you a free consultation. Go to greatcreditfast.com. I'll catch you guys in the next video.